All right, let's talk about Bitcoin's price in 2026. If you've looked at the predictions, you know it's a mess. The forecasts are all over the map, and honestly, they seem to completely contradict each other. So let's cut through all that noise and try to figure out what's really going on.
So, what is the magic number? Where do the experts, the people who do this for a living, actually see Bitcoin landing? Well, this is where things get pretty wild.
Okay, so on the more cautious side of things, you've got some analysts calling for Bitcoin to be around $75,000. Now look, that's still a huge number, don't get me wrong, but it's a world away from some of the highs we've seen. But then you look at the other end of the spectrum, and wow, $225,000. That is a 300% difference between the floor and the ceiling. We're not talking about a small disagreement here. And this is really the core puzzle, right? How can so many smart people look at the exact same information and come up with numbers that are light years apart? It's not really about who's right or who's wrong. It's about understanding that Bitcoin is being pulled by these incredibly powerful opposing forces. To get a handle on where we might be going, we've got to look at where we've just been. And let's be real, this kind of insane volatility isn't exactly new for Bitcoin. The stage for 2026 was pretty much set by the absolute roller coaster that was 2025. I mean, just take a look at this. It's been a ride. Last October, Bitcoin was just soaring, hitting a new all-time high of over $126,000. But then, whoosh, the floor just dropped out. By the end of the year, it had plunged to around 80,000. That means we kicked off 2026 almost a third below its record high. You can feel the whiplash just looking at it. So here's the thing. Every single analyst, whether they're bullish or bearish, is basically looking at the same set of key factors. Their final prediction, that huge difference in price, it just comes down to which of these forces they think is going to win out in the end. We're talking about the really big picture stuff, global interest rates, geopolitical chaos. Then there's the ever-present question of regulation. What are governments going to do? And crucially, there's a massive shift in who is actually buying Bitcoin these days. And finally, you've got new players in the game, like Bitcoin ETFs, while some of the old heavy hitters are starting to fade. And about those old heavy hitters, let's quickly define what a DAT company is. These are basically entities that were buying up enormous amounts of Bitcoin. They were a huge force propping up the market. But the consensus now is that their big shopping spree is probably over. That takes a major pillar of support right out of the market. This right here, this might be the single biggest change happening in the crypto world. The market is maturing. It's kind of growing up. It's shifting from a world driven by individual retail traders, people like you and me, to one dominated by the big dogs, huge institutional players, banks, and massive asset managers. And that fundamentally changes the entire game. Okay, so with all that in mind, let's circle back to those price targets. Now we can actually start to understand why different analysts are weighing all these factors so differently. And this chart just lays out the divide perfectly. You look at Bitmining, and they're giving that huge 75 to 225 range. Why? Because they see a total tug-of-war between good news, like rate cuts, and bad news, like global chaos. But then you have Standard Chartered, and they are laser-focused on just one thing, ETF buying. They're predicting 150K based almost solely on that. Each expert is picking their champion in this fight. This quote from Sidney Powell at Maple Finance is a perfect example of the super bullish case. He's pointing to a massive change in how people think. He's saying the sophisticated long-term holders, they don't want to sell. They want to borrow against their Bitcoin. Think about that. That creates a powerful upward cycle. Less selling, more use for the asset, and in theory, higher prices. So after all of this, what's the big takeaway? We've got all this conflicting information. How are we supposed to synthesize all this uncertainty into something that actually makes sense? It really is a tug of war. That's the best way to think about it. On one side of the rope, you have all these bullish forces pulling the price up. Institutional money from ETFs, the chance of rate cuts, new investor behavior. But pulling just as hard in the other direction are the bears, with things like geopolitical chaos, scary stock market valuations, and just a ton of policy uncertainty. And here's the most crucial point. That massive price range from 75,000 all the way up to 225,000. That isn't a sign that analysts are clueless. It's the exact opposite. It's a sign that they recognize Bitcoin is at an incredibly important crossroads, a major turning point where the outcome is genuinely up in the air. So that leaves us with the one question that really matters for 2026. Which force is stronger? Will the maturation of Bitcoin, with all this new institutional money and all these new products, win the day? Or will the unpredictable chaos of the global economy pull it back down? The answer to that question is what will determine whether we see 75,000 or 225,000.